In this video, I want to talk about how I've been trading recently using supply and demand zones, using support and resistance, using the tape, using order flow, and just combining my overall analysis, playing levels in the market, coming up with levels and seeing how and what the market does at those levels of interest. So in this video, I want to break down exactly how I've been trading. I'm going to show you exact trades, entries, exits, stop losses, and analysis for each setup. But before we get into that, I recommend everybody watching this to follow me on my Instagram at Investortrade. I'm going to post a link in the description below. This is my only account. I post daily trading recaps along with really good trading tips and tricks that I guarantee you're not going to find anywhere else on the internet. The link will be in the description below, and sometimes I even post levels and potential setups on there as well. But now let's get right into these trades. We first need to understand the backbone to how I've been trading. And I made a video on this recently about just playing levels and coming up with levels of interest and seeing how the market reacts to them. They are important inflection points in the market that cause a severe reaction or even a non-reaction in the market. So majority of my entries or majority of my trades have been coming or at an area of a key level break, maybe a large participant on the tape, reading the order flow, maybe spotting large buyers, large sellers, maybe an area of high liquidity, maybe an area of low liquidity. Something on the tape, understanding the orders coming through with larger participants. I love to put myself in the shoes or the heads of other traders in the market. If I'm a buyer at X price, I want to know if we get to Y price, what this buyer is going to feel like. Or if the market's selling off and I was a buyer before the sell-off, I want to know what I would do is if I was a buyer and the market's selling off and I have to stop out, where am I going to stop out at? So understanding these key inflection points, key level breaks, supply and demand zones also, I did not mark here, but I do trade entries off of them. But majority of them come from these structure, order flow, participants, or key level breaks. Now, where are my targets? My targets usually have been the nearest supply or demand zone. So I've been using more of imbalances, not so much to enter trades. I will only if it's a higher quality setup, but I've been using zones in this market in these conditions specifically for targets or a nearest support or resistance level, basically anywhere that the market could react or reverse at. If I am looking to long the market and I see we're coming up to a resistance level, or I see we're coming up to a supply zone that has rejected the market before, I'm going to use that level as a target. So essentially, this is the line of least resistance. What I do is I say, okay, Apple is coming to support at $100. If Apple breaks 100, I know we do not have demand or support until 99. So if we break below 100, I'm going to get short and target the $99 demand zone. This is the line of least resistance, meaning once we get above or below a certain level of interest, which comes from these criteria right here, once we get above or below that level, then I am looking to play the market long or short, targeting the nearest one of these criterias, because I know once we break below that level or break above that level, we have a line of least resistance, nothing stopping a move up or down into that target. Now, I've been scalping these very quick moves. I look for momentum. I look for strong volume. I'm not really trying to expose myself very long in the market. If we break a level like this and there's nothing stopping a move up or down into that target, you want to see that move happen fast with a strong velocity. You don't want to see a slow grind. You don't want to see a lack of momentum. You want to see a very quick scalping type of move. And if you lack momentum, the chances are that setup is less likely to work out, at least in my opinion. I would say 95% of these trades work out right away. And if it doesn't work out right away, it doesn't really mean I'm wrong. It just means that I might have mistimed the market. And you're going to see that in one of the trades that I took. It's a perfect example of that. I would say 95% of the trades are on ES and SPY. So if you trade futures, which I recommend a lot of beginner traders do, it involves margin. So there are risks to using margin. However, trading futures is easier to manage risk versus options. And a lot of traders cannot manage risk properly on options, which is why they lose a lot. The last point is if-then statements, meaning if we get below X and we react to Y, I want to play short targeting Z. It's not, okay, we broke below 400. I'm playing short right away, and I want to target 399. It's okay, if we break below 400, we spot aggressive sellers. I want to play short targeting 399. If and then statements are vital. So the first trade I want to illustrate this point with was on Tuesday, December 6th. It was a little over $8,000 profit. I had about a 3-to-1 planned risk to reward. And by the time I sold this position, I realized about a 2.5-to-1 risk to reward. So I really tried to focus on setups that offer at least 2-to-1. I will sometimes sacrifice a smaller risk to reward if it is a high probability setup. But this trade was an $8,000 profit, and I want to explain this, and let's first go over the levels in the pre-market plan. Now, I post these every single day in my Discord, setups I'm watching, levels of interest, and possible trading scenarios. The Discord is only available for Investor-Trade members. I get a ton of questions when I make these videos. So on December 6th, my first level is 4018. If we can successfully reclaim above this, remember, if, then I am interested in playing longs targeting 4039. However, if we are below 4018 and fail at 3992, I am interested in playing shorts for a sell-off into 3972 and 3960, which in the background is these green demand zone boxes down here. So these were my levels pre-market. I post these before the market opens up. And I want to explain where I got each level from. So where this 4017 level came from, which is this yellow line on my charts, was essentially the previous about mid of November to about the last week of November, or even the start of December, was the upper balance range, meaning we were inside of a very tight balanced range. It's acted as resistance multiple times, and this was the balance period around 4017, 4018, that once we got above this level, we held above and then immediately reclaimed back below it, and it acted as resistance multiple other times once we were below 4018. So obviously a very, very important level of interest that while this day was occurring, I could not be bearish if we were below it. What I would want to see was if the market could reclaim above this yellow line at 4017, 4018, then we should see a rally into 4039 as we don't have any resistance or supply above. However, we opened below this level, and the downside plan was if we are below 4018 and failure at 3992, I am interested in playing short for a sell-off into demand below. So where this 3992 level came from was the consolidation about 4 or 5 days prior to this on November 30th on that very large, I think this was an FOMC announcement where the market ripped about 100 points, 150 points. This little consolidation area right here, not really demand just yet. Demand is a little bit lower. At 3992 was the next level of interest. So now going back to an intraday chart, we have our levels plotted out. What I was watching for was if the market could break 3992, there is nothing below this red line right here at 3992 stopping a drop into 3972. It was essentially what I call white space in the market, meaning through this range that I'm drawing a box over right now, this new green box, inside of this range, there is nothing stopping a drop once we get below 3992. This is the line of least resistance. Once we are below it, we should see a very strong sell-off targeting 3972's demand. So essentially the market broke below this 3992 level. I recorded this whole trade live. I did a live trading video in the Discord for members. We broke below 3992. I took the market short, stop loss above 4,000. So I was risking about 8 or 9 points for a potential 20 to 32 points to the downside. Excellent, excellent risk to reward. We came back up. This 3992 level, once we are below it, acts as resistance. We rejected that perfectly. So this is almost like a break and retest. And then we continued to sell off into 3972, where I scaled out 80% of my position. I was even walking members through this trade in the intraday commentary tab. I said there's no support or demand into 372, 3960. And I'm going to take 80% of my profits off once we hit the 7.2 target, which is what I did. And I said I expect more downside, so I'm not ready to sell. And I'm holding out 20% of my position until we hit that 3960 level. So then the market keeps selling off and I sell my full position according to my plan at 3960. Now what gave me more confidence in this setup, why I entered it, was we had a similar plan on NASDAQ. NASDAQ had demand at 11783 and we had support at 11750. Very similar levels to the S&P. If we test this zone and fail to find buyers, strong selling, and weak market equities, this can support the S&P and the NASDAQ bearish plans, and I want to play short targeting 11625 demand. So essentially the same exact scenario here. We have demand. It bounced 2 times in the overnight session, caused a nice rally to the upside, that once this level broke, we did not have any demand or any support once we got below my bears below level, and then we could play the market short targeting the demand zone. So once I saw this and the S&P 500 sell off simultaneously, it gave me very high conviction to take this setup, and I followed my plan and sold when my target hit. And this was an $8,000 profit, and this trade cost me about $1,000 per contract, so $7,000 to make $8,000 in profit. Excellent trade, and this was one of the stress-free trades of the week. Obviously, not every single trade is going to be this clean. So here's another plan. This was on December 1st. Scenario number 1 was I found it very hard to be bullish below 4096 supply, which is this pink box right here. As long as we remain below this level, the risk is on to bulls and the market could pull back into 4039, which is this yellow line over here, which I said should offer some support, and it's very bearish if we break below 4039. So essentially what happens here is the market opened up. Many were expecting continuation because look what happened the day prior to this. This is when we had that large rally where that 3992 level came from that I mentioned in that previous trade. The market made a very large rally and everybody was expecting that continuation the following day. If you didn't know we had a supply zone there, this is why I said I find it very hard to be bullish if we are below 4096 supply. So I look to find sellers here now. This trade was about a $4,800 profit. It was 6 lots. And I was planning to get a 3-to-1 risk to reward again, but we fell short to the target. So this is an example. I showed you a really good setup. This is an example where our target never did hit, but you must react to what the market does. So essentially the market came up. We had news that came out at 10 o'clock, very large upper wick. I think I actually made a recap video on this. And I got short when the market broke below. Green box, stop loss above 4,100, small risk. And my target was this 4039 level. This trade, awesome. It worked out right away. About 25 point sell off immediately. And I was telling members, once this 4085 to 4080 level gives up after rejecting the supply, this is where I become interested in playing a downside move. Then the market sells off and I get out 80% of my position at 4065 because this is what I mean with reacting to the market. This was the line of least resistance. We rejected supply. We broke below our 4085 key level, which is this green little box I just added. And my target was 4039. But the market lacked the velocity that I was expecting and the juice to hit 4039. So essentially what I did was I saw buyers on the tape. And as the market moved up, I got out 80% of my position, boosted my stop loss to this about 4075 level, and I kept the remaining contracts open in case this thing did want to keep selling off into our 4039 target. But we never did, and I stopped out of the remaining position for a 10-point gain on the 20% contracts remaining, and then the market never hit our target. And this is an example where sometimes the market doesn't do what we want it to do. Yeah, we got below our levels, but there are new information that presents itself as the market's developing. We spotted buyers on the tape right here at 4065, 4060. And actually, now that I look at it, this actually, was a nice long entry off of this little structure down here. That would have been nice as well. But I stopped out the remaining trades as the market moved up for a profit, and I sold into the strength to the downside because I spotted buyers on the tape. React to what the market gives you. The next setup I want everybody to pay attention to because this one was a winning one, and I took the same exact trade in the next few days, and the next trade was a losing one off the same analysis, same entry, same everything. So on December 2nd, we had the NFP numbers, the non-farm payroll news coming out, and I posted my plan before the news. Now, before the news, the market was very calm. We were very flat, and we had a couple levels of interest. The first one was I could not be bullish below 4085 and 4096. In fact, I'm first going to be looking for sellers here to play the market short into that 4039 demand zone, which was that same level from that trade yesterday that the market failed to hit our target. So essentially below 4085, I am short, looking to play a sell-off into 4039 demand. Well, guess what? News came out. The market had a really strong sell-off to the downside, and technically it hit our target, but it was off news. But that just goes to show you, price precedes news. And then we consolidated a little bit before the open, and now I updated my plan before the market even opened up. What I said was if we can reclaim above 4039 to 4050, especially in the first hour, this is going to invalidate more bearish downside, and the market may see some upside. In the intraday commentary tab, as long as we remain below this range, bears have control, and a sell-off into the demand zone lower is likely. And then I updated my plan around 3 minutes into the market open, and I said we saw a rally up, and I said this downside move is going to be short-lived. If we reclaim above this range, I cannot be so short biased inside of it. In fact, the reason for the entry here was as long as we can hold above 4037, I am interested in playing the market long, targeting 4072, 4085. The market was very bullish in this case, providing nice bullish signs not only in the chart, but also on the tape. And I played the market long as we held above 4037 with a stop loss below 4048. The market pulled back into this. This did not work out right away, but we did pull back for the whole afternoon session. I took some profits into strength, and I took the rest into 4085 seller level, which was a $5,600 win. It was a little over 2-to-1 risk to reward, but I scaled a lot of my position up here before our target actually hit. I do want to say this is not me bragging about how accurate the plan is or the levels. This is just to me give you context of the setups and show how powerful it is to just play levels and not where you expect the market to go. So on December 9th, we took a very, very similar setup to that last trade I just explained, where we had our levels of interest, that we were bearish, bullish, below or above, and then the market had a sell-off on news before we opened up. This chart looks identical to that trade that I just took, right? Sell-off on news, we consolidate, and then I updated the plan in the Discord. What I was watching for was a reclaim above 3955 and 3970. If we can do this in the first hour, I'm going to be interested in playing longs, targeting a key level of supply at 3992 above. Now, this was a losing trade. Got no problem showing it to you all. There's no point in hiding behind losses. But essentially what happens was the market opened up, we consolidated, and I was even telling members in the intraday commentary tab, I said I was long, my stop loss, my target. I was speculating a break. What happened was the market came up, I got in long, stop loss below this area right here, targeting the key level above. I mean, look how many times we held 3955. We did it one time, 2 times, and a bunch of other times throughout the day. The plan was if we could reclaim above it and hold above it, I'm going to be interested in longs. So essentially I took the market long. As soon as I got in, we failed, came back into this range. And as soon as I saw this breakout above, an immediate move back into this range, I stopped out of this trade for a small loss when I had it. Then the market came up, really never hit the target. And then we broke below 3955 and had an end of day sell-off. So the strategy is not magic. This was another trade that I took last Wednesday. It was a $2,000 loss. You're gonna have losses. It's not a holy grail. It's just very powerful when you combine market context, you play levels, and you implement proper risk management where when you do lose, it's inevitable, your losses are small compared to your wins. So this is how I've been trading. I hope maybe a light bulb could go off in your head. Maybe you can conform it to your own style, whatever the case may be. But if you got any value, I would appreciate a thumbs up on this video. Let's try to get to 1,327 likes, and definitely check out the links in the description below. If you want to become a member of Ameritrade, you get full access to the in-depth course, and the Discord is free and included for members only. But I'm ending it. Peace out.